We're looking at Carvana, which we have one of the stocks in our portfolio right now, and we've kind of zoomed down to a 30-minute. We were actually talking before this, looking at daily charts and weekly charts. And essentially, what we were talking about is we're in an area right now where this is kind of a key spot on a short-term time frame. Now we have this on the weekly on our pick, right, on a weekly time frame, but that doesn't mean that we have to stick with just a weekly chart. I mean, we could decide that we need to come out and then try to come back in later if that's what we want to do. And so that was what we were just discussing. So now let's go back to the 30-minute, what we were talking about, guys. So what were we saying here on the 30-minute about the gap down? I missed that. Yeah, yeah, and so you're saying basically if we come back up to here and can't get back out over it. Yeah. And so we got a gap down. If we get a spike up and then we just fell there and start back down, right? You probably don't want to hang around. Is another way of looking at this on a 30-minute. Yeah, I mean that's. I mean I can't disagree with it. I mean you've got. I was just looking at the volumes here today. All the volume was on that gap, so it looked like they pressed it and they never hit it again. So I mean I don't know what the market's going to do tomorrow. The market's really kind of struggling here to decide which way to go. But I wouldn't be surprised to see it test this in the morning, fairly early tomorrow. And if that holds, that gives you a decent shot to, you know how they always go and try to test the other side. The other side would be right here. And then, of course, if they get over that, then the other side is the gap fill. So I think those are the three spots in the morning. You don't want to see it breaking down here early and just, because then I think on the daily chart, you're going to probably go after that swing point low, which becomes a little bit dangerous because although I didn't show it again, it becomes a little dangerous because on the daily chart, you've actually got, as we talked about just a second ago, you've actually got two swing points down here that if they both break, right, and this is where it would go after that area there, you got a lot of swing points on the way down, so you could just get a little escalation on stop outs. And so you'd rather not, write it down and then write it down more, right? Even if you're on a weekly time frame, you'd want to try to maybe take and stop out of some of this early and then come back in somewhere. Even because I don't think it does anything to the long-term chart, right? I mean that weekly chart still looks great. It just had that test and failed up there and it's pulling back. But more than likely, it's going to find support somewhere and go back the other way again. So you just got to figure out where that is, which is always the hard part. The volume on the weekly started coming in really around 58 and a half. And the low of that swing point high that we were testing is 59. So if this escalates a little bit to the downside, that would be the area I'd be looking at. So hopefully that helps a little bit. And if I pull, I'm just pulling the monthly over just out of curiosity. So the monthly, boy, I traded right to the high and didn't get over it, huh? And then today, I mean, this month, it's actually got more volume. So, and again, this doesn't look bad at all on any of these longer term time frames. It's just you got some indigestion here on the short term time frame. Okay. All right. Well, let's see about the next one. So the next one I got on here is DRE, Duke Realty. So I'm assuming long since this is a utility stock. I don't know. I think it is. I think this is one he brought up. So in his comments that he left because he couldn't be here today, he said these stocks look strong, but he can't figure out where a good entry might be. So let's just talk about that for a second. You got to break out And this happened 2 months ago on the monthly. And if I go back to the weekly, the breakout back here was roughly 2.5, 3 months ago, right? And on the daily, oops, let me find the daily. On the daily, okay, so on the daily it actually fell on bearish retest regens, and now it's popped back up a little bit. Huh. Well, my first impression here is, I mean, it doesn't look bad. You got to, like the other one we were just talking about, you got to find a spot, right? This one has a swing point low and a swing point high. It's tested twice. So you don't really want to wait on the retrace to here on a weekly because your odds are against you. You really want it to find support now. I think what I would be doing on this one is I would see if it can break back over this breakdown bar. And if it breaks over the breakdown bar, then you have a shot at actually extending again. And then you can take your stops and put them up higher, not have so much downside. Because I really wouldn't want to buy this retrace at this point. Now, if I went out to a monthly, the monthly's not as bad. A retrace there would still be okay. It'd be the second one. So this one doesn't really, it's not that appetizing to me. I mean, you yeah, I just don't see, it's almost like you're trying to force a trade on this one. So here, I'm just going to stick it in, take a quick look at it. WELL. Let's see what. Um, yeah, let me add it. And yeah, that one looks a lot better. Yeah, so this one's fairly young too, which is good. Yeah. Yeah, I mean, I think the other one you're trying to press a trade if you're trading it or trying to trade it. So that's not usually a good thing to do. So my opinion on DRE is like, probably pass. There was another one which was XLU. So this is utilities as well. Yeah. Yeah, you're getting close enough to the end of the week there, you can make a decision. Yeah. Yeah, as you get towards the end of the week, you actually don't want to see it come back in, right? You actually want it to hold now because otherwise you're going to get a candle just like you had last week, right? So you really don't want to buy a candle that looks like that. So you want it to hold strong, and if it holds strong, then you just simply, hold your nose and buy some. So, okay, so that's XLU. Well, we just did. Let's look at UAA. So Under Armour. So this one goes up. So if I remember right, this was earnings back here. I remember looking at this. And so they had two bad bars associated with earnings. Even though they pushed up, the sellers took control and pushed it right back down. I don't know what was going on back then or why, but that's what happened. That was in May 1st, which is these bars I see here. And boy, it had the same thing back here. Huh. So that's twice you've gotten these big pushes. Yeah, so you're saying you were looking at this right here as a target? Yeah. Well, trying to. Yeah, I mean it's kind of over the two anchor bars. No, I've got the latest quotes. It closed at 24.27. I actually put a cron job in and run these quotes on time so we have them so I won't forget. So yeah, I mean it's right now it's overall, both of them they're right at 23 and a half, 24. And so this is another one where if it looks like it's going to end here on the week, you could take a shot. The only thing I dislike about something like this is what, well, not that, just that this just moved 20%. Is that what I'm seeing? No, yeah, it's 20%, right? And why are they're a retailer, why are they not hit by all the worries of tariffs? Is it not addressing these guys? Yeah, yeah, I mean all these clothing manufacturers are getting hit, right? But well, if they were going to, they probably would have already got hit. Maybe that's what happened back in these other places. I mean, this was December. This earnings was May. Maybe these things got hit on the freak out of tariffs that somehow don't affect them, and people then walk back into the stock, right? I don't know. Well, I'm just wondering out loud because if I'm going to take a position, I kind of want to like at least have some idea of why I see such these big drawdowns. Because I don't want to get caught in one of these things. And we just saw it, do a 20% this way. So, are we going to get, yeah. Well, the other thing, yeah, it's a good point. The multiple time frame breakout is a good point. I would warn you though, and I warned somebody else this week, and I know you remember because I know we did this about a year ago. Those multiple time frame breakouts are most valuable when the market's strong. When the market starts ranging, they become less valuable, right? Because the market's tugging against them at times. You know what I mean? As the market goes down and as it builds out its range, these multiple time frame breakouts have a harder time extending and not coming back. So no, it's not. Well, yeah, and your volume here that's earnings, I think. So you always have big earnings volume. There was something that happened here, right? That's a big wide price spread, high volume bar, and that's a good thing. What you'd really like, and this requires a lot of patience, is you'd really like it to close over it. Don't nibble on the breakout and then try to buy it right around 23.75. Yeah, right off of this big, because this is one saying buyers were really hungry, right? Whereas this one said, the sellers just hit it after they popped it open, right? Because they opened it up here. I don't mean a I wanted to close over it today or this week, or actually this is today, right? It already has. So this will print as a swing point high today. I mean a breakout. Yeah. I wouldn't want it to do that today. I wouldn't want it to go up there and fail today. It didn't fail today, right? Matter of fact, it succeeded, right? That's a breakout today. And so this will get an H tonight when the programs run. Not, excuse me, not an H. It will get an arrow, right? It'll get a green, it'll get a red arrow actually right there. Yeah. And over here, that's still fine. There's nothing wrong with it here. And so all I'm thinking is I would rather see it, and I'm not talking about a day or two. I'm just saying I would rather see it go up, towards this top or just a little bit more or something, fade back in and then give you the entry, right? Um, Yeah, it is. I mean, and that's what we were talking about, right? It's sloppy because you got all of this, big up, big down, and you have it again over here, big down, big up. The other thing that worries me, when I look at something is, I mean, this is Under Armour, 20% move. I mean, it's not like it's a brand new stock with, we're going to conquer the world kind of thing. But maybe they are going to conquer the world. I don't know. I don't know what they're doing to get this kind of move. But it just concerns me. I've got a market that's probably ranging. I've got a lot of news stuff that can move stuff now, right? And I think that's why we're starting to see the range. And when we see that, these breakouts become less, shall we say, exciting, right? Because you have a higher probability of these things not doing what they typically should do, which is just keep extending. So yeah. Yeah, and if you do that, you really want to retrace, you really want the breakout this week and then a retrace back into the swing point high so you can fight back in the middle of this area here, right? And yeah, and I mean those probabilities. Remember when I did the data, when I did all the analysis. I mean, if I had it to do over now and I had all the data at hand, I could just rip through this stuff and do it. And I don't really have it set up that way, because when I did this, I didn't know as much as I know now. But I would have liked to, for example, do a little bit more granularity. For example, when the general market is ranging, what does the breakouts look like then? When, because all I have is that here's how breakouts look across all types of general markets, across all types of sectors. I didn't really distinguish what those look like. And my guess is, and that's why I'm saying this, because we've seen this anecdotally. My guess is that if a bull market's going on, and it makes sense, right? Then breakouts are going to have a nice probability, right? They're probably just going to run with the market, and they're not going to retrace, which is the normal case. But I don't. All I have is the anecdotal knowledge that I know that whatever the percentage is, there's a little less percentage, breakout's going to keep going. Exactly. Yeah, when you first learned this, you're like, I just want these breakouts, right? And then we went into a range market and they all failed. Yeah, but over time, if you do this, if you over time you do it for 15 years, you're going to get that percentage, right? It was. Yeah. Yeah. Okay, let's look at the last one here. It looks like a defense stock. No, LNT. Not who I thought it was. Alliant Energy. So this is another energy. So this is energy, yeah. Is this the utility? Here, we can find out. Just look. Utility. So we have a utility stock, and yeah, these things aren't even really extended, are they? That's interesting. Yeah, so the breakout on this one, so it breaks out, does some hesitation, right? Long tails on the top, and then today it reverses because they can't take it back down. And if we look at um, this one, you've got the breakout as well. Now this breakout looks like it's going to try and hold. Because, and the reason I say it is because here you had the attempts twice to take it back. So it may or may not, but I'm just saying this one looks stronger than some of the others we looked at just a second ago. You got to break out all three time frames, and I think the question on this one again was, okay, this looks strong. I don't know where to get in. This is one I wouldn't probably mind taking a shot at after what I see today. 2 to 3 bars, 2 to 3 bars. You've already got the 2 to 3 over here. Yeah, but this one looks of the breakouts I've seen so far, this one looks viable. So no, it didn't. And actually, it's a good point you bring up. You know, one thing is that if if you're buying a breakout, the reason you're buying the breakout is because you believe it's not going to retest regen. That's the only reason you would buy it. Otherwise, why buy it? Just buy the retrace. If it does retrace, and the fact that it's 3 bars now, you know, if you get 3 bars, 4 bars out, you can then buy that breakout knowing that even if it comes back, you got a high probability, you know, if you get a couple more, right, you got a high probability test here that's probably going to succeed. Exactly. So you buy a piece of it up here and you say, you know what, if it does come back, I'll just buy some more down there, unless it looks horrible when it comes back. And so, yeah, it does increase your odds, right, the longer you wait. Now, the problem is the longer you wait, the higher the price gets on you usually. Right? The more information you get, and that entices you to do something, usually goes against you in terms of what kind of gains you're going to get in the end. Yeah. Yeah. So that's a good one. All right. I'm gonna cut it off unless y'all have anything else you want to do. I'm gonna cut this piece of it off at least.